Hey everyone, welcome back to Corporate Decoder. Today, Puget Energy Incorporated just filed their quarterly report for the period ending the 30th of June 2026, and we are going to break down what these numbers mean for the company. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report shows a lot of growth and expansion, but also some new debt and regulatory shifts that are worth keeping an eye on. So we are looking at Puget Energy Incorporated, which is a pretty significant player in the energy sector, primarily through its subsidiary Puget Sound Energy, or PSE. Think of Puget Energy as the parent company and PSE as the main operating utility serving a big chunk of Washington state with electricity and natural gas. They are basically the backbone of energy for a lot of homes and businesses in that region. Let's dive straight into the financial numbers. For the 3 months ending the 30th of June of 2026, PSE saw its total operating revenue jump to about $1.3 billion. That is a solid increase from last year's roughly $1.1 billion. And looking at the 6-month period for 2026, revenue hit over $3.1 billion compared to about $2.7 billion in 2025. This growth is happening across both their electric and natural gas businesses, which is a good sign of broad demand. Now, for the bottom line, what they actually pocketed. For the 3-month period in 2026, net income was about $49.7 million, up from around $44.2 million in the same period last year. For the 6-month period, it was even more impressive, with net income reaching over $272 million, up significantly from about $211 million in 2025. This is great news, showing they are not only bringing in more money, but are also managing their costs effectively to increase profits. Moving over to the balance sheet, which gives us a snapshot of their assets and liabilities on the 30th of June 2026, total assets were around $21.6 billion. That is up from about $20.9 billion at the end of 2025. Their utility plant, which is essentially all the power lines and gas pipes and facilities they own, is a huge part of that asset base, worth over $15 billion after accounting for wear and tear. On the other side of the balance sheet, we see their total liabilities and capitalization. This figure also grew to about $21.6 billion in 2026. A big chunk of this is long-term debt, which increased notably from about $8.5 billion in 2025 to over $9.4 billion in 2026. This increase in debt is likely tied to their ongoing investments in infrastructure and new projects. When we look specifically at Puget Sound Energy Incorporated, which is the actual utility operating company, the numbers are similar but with a slightly different structure. Their total assets grew to about $19.2 billion in 2026. A key difference here is that their common stock actually has a par value and shares outstanding, unlike the parent company. Their total common shareholders' equity also saw a healthy increase, going from about $6.2 billion at the end of 2025 to over $6.4 billion by June 2026. This shows they are building value for their shareholders. Now let's talk about cash flow, which is the lifeblood of any company. For the first 6 months of 2026, PSE generated a very strong $811 million in cash from operations. This is a significant jump from around $602 million in the same period of 2025. A big part of this boost came from proceeds related to selling tax credits, which is a smart way to bring in extra cash from their renewable projects. However, to achieve this growth and maintain their infrastructure, they are investing heavily. Construction expenditures were about $851 million for the first 6 months of 2026. This is a substantial amount and shows their commitment to future growth and system upgrades. Digging into the notes, which often contain the most interesting details, we find some important information about their accounting policies and recent updates. One area they are closely monitoring is their allowance for credit losses, which is essentially money set aside for customers who might not pay their bills. For the first half of 2026, this allowance decreased slightly, which is generally a positive sign indicating fewer expected defaults. A significant part of their business is the Tacoma LNG facility. This is a liquefied natural gas plant that helps SES meet peak demand for natural gas and also serves transportation customers. They have a regulated portion managed by PSE and an unregulated portion handled by Puget LNG. The way costs are split between these two entities is a key regulatory decision. Looking ahead, new accounting rules are on the horizon. The FASB has issued guidance on environmental credits and obligations that companies like Puget Energy will need to adopt in the future. This suggests a growing focus on environmental compliance and reporting. Let's look at their revenue breakdown. For the 3 months ending the 30th of June 2026, electric revenue from contracts with customers was over $1 billion. This is a significant increase from last year driven by higher rates and increased usage. The report mentions electric operating revenues increased by $182.8 million for the 3-month period. This increase is attributed to higher rates from new tariffs and a modest rise in electricity usage. They also saw a decrease in sales to other utilities, which is interesting but seems to be offset by their core customer business. On the cost side, electric power costs went up by $105.6 million. This is largely due to higher prices for purchased electricity and increased volumes. They are buying more power from the market, which suggests they might be relying less on their own generation for certain needs. In the natural gas segment, operating revenue also grew by $17.4 million. This rise was mainly due to rate increases, which helped offset a slight dip in natural gas load, probably due to milder weather. Purchased natural gas costs increased by $5.1 million. This is partly due to costs related to environmental compliance, but also influenced by changes in natural gas rates and usage. Looking at operating expenses, utility operations and maintenance costs rose by $22.8 million. This includes investments in deferred maintenance and labor costs reflecting ongoing efforts to keep their systems running smoothly. A notable item is the increase in interest expense by $10.5 million. The report specifically points to a recent bond issuance, which means they've taken on more debt to fund their operations and investments. This is common for utility companies, but something investors always watch closely. When we combine the results for the parent company Puget Energy, its net income increased by about $3.3 million for the 3-month period. This is a result of PSE's improved performance balanced by higher interest costs from those new debt issuances. For the 6-month period, Puget Energy's net income saw a much larger increase of $58.6 million. This surge is primarily driven by PSE's strong financial results and some favorable tax impacts. Looking ahead, their capital expenditure plans are substantial. They project spending over $2 billion in 2026 on energy delivery technology and facilities and expect to increase that to over $3 billion annually in the coming years. This shows a massive commitment to upgrading and expanding their infrastructure. The good news is that despite these large investments, their cash from operations is also growing significantly. For the first half of 2026, cash generated from operations jumped by over $208 million. This is a very positive trend indicating they are generating enough cash to cover their operating needs and invest in the future. A big driver here was the sale of tax credits from their wind projects, which is a smart financial move. Now about that debt, the report mentions that PSE has significant debt, but also a lot of room to issue more first mortgage bonds. For example, they could issue about $4 billion more under their electric mortgage and over $3 billion more under their natural gas mortgage. This means they have access to capital if needed, but also that their debt levels are substantial. And for shareholders, the company has dividend payment restrictions in place. These are tied to their financial health and credit ratings. Currently, they are in compliance with these restrictions, meaning they can continue paying dividends, which is always a good sign for investors. The parent company Puget Energy also has similar dividend restrictions tied to its debt covenants and its earnings to interest expense ratio. They are currently meeting these requirements. Looking at risks, the company is exposed to commodity price fluctuations for electricity and natural gas. They use hedging strategies to try and manage these risks and minimize volatility for their customers. They also face counterparty credit risk, meaning there is a chance that companies they do business with might not fulfill their obligations. They manage this by carefully selecting counterparties and monitoring their financial health. A large portion of their energy portfolio is with investment-grade counterparties, which is a positive. Interest rate risk is another factor they manage primarily through a mix of fixed-rate debt and by using credit facilities. Overall, Puget Energy and PSE are in a position of growth and significant investment. They are expanding their infrastructure and renewable energy projects, which is crucial for meeting future energy demands and regulatory requirements. The increased revenues and profits are encouraging, and the strong cash flow generation is a positive sign. However, the rising debt levels and ongoing need for capital expenditures mean they will continue to rely heavily on the capital markets and regulatory approvals. The company seems to be navigating these challenges effectively, but it is a complex environment with many moving parts. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.